All right, let's try an example. So here we have Zeb Training. Credit sales are given, AR is given. They estimate 3% of sales will be uncollectible. Okay, so think back to your slides. Here's your formulas. It's obvious this company is using that percent of sales method. So there's your formula, right? Okay. So let's go back to it. Sales times percent uncollectible will give us our estimated bad debt expense. We're preparing the adjusting journal entry. The accounts are always the same. Doesn't matter which method we are using. ADA, remember? This is going to be your accounts. Doesn't matter which method we use. To estimate uncollectible accounts using the income statement method. All right, do your math. Sales 1275 times 3%. $38,250. All right, good for the journal entry. The next one says, what's the ending balance going to be in ADA after your adjusting entry? Well, we know that we credited ADA for $38,250. Was there a beginning balance? There is on the credit side. So that means we end with $40,250. Okay, so while we may not care about the beginning balance for the estimate, right? We didn't consider that for the estimate. If they ask us what the ending balance is in the account, of course we have to consider that. All right, and then what is the net realizable value? We remember the formula for net realizable value from our lecture video. Let's see if I can refresh our memory. There it is. Okay, so AR less ADA. AR less ADA gives us our net realizable value. Your AR should be given there at the top, 250. We, of course, just calculated our ending ADA balance. Make sure you bring forward the ending balance. A lot of students just want to bring forward the journal entry. Bring forward your ending balance. And then solve. 209,750. Yay, you did the first part. On to the next one. Now we're using the receivables, percent of receivables, right? So remind yourself what that formula is. Here it is. Well, let's jot it down. It's going to be AR times percent uncollectible. That gives you your total ADA minus, well, I guess I should say adjust for beginning balance. We don't know yet if it's add or subtract. Oops. Beginning ADA, that's going to give us the amount for our journal entry. Bad debt expense. Your accounts are the same as they were for above. Bad debt expense and ADA. Same accounts, right? What's changing is the amount because we're using a different method to estimate uncollectible accounts using the balance sheet or percent of receivables method. All right, we'll go back to our formula. so we can figure out those amounts. Start with your AR balance, $250,000. They tell you it's 6% uncollectible. Or $15,000 even. Now remember, this number, not your journal entry, it's what you want to end ADA with. You want to end with 15. You have 2,000 credits already in there. So you have to determine, how much do I need to put in to get me to that 15? So it looks like we're going to subtract the two. So you're going to see you subtract whenever you have a credit balance. If we had a debit balance, we would add. All right. So it looks like we need 13,000 in our journal entry. On to the next part. What's your ending balance in ADA? We already did that, but we can do it again. 13,000 was our adjustment. We had 2 in there. So our ending is the 15 that we were supposed to end with, according to the percent of receivables method. And then how is this going to appear on the balance sheet? AR of 250 minus your ADA balance. Remember to bring forward the ending. It says 235, and that's called our net realizable value. Yay, good job. Hope you did well.